What if I told you that a single decisive election result would be the final nail in the coffin for renewable energy stocks worldwide? Another election that could completely shatter global energy markets. And no, I don't mean Trump, nor is it anything to do with Washington, D.C. It's actually in Oslo. It's a claim that Norwegian voters heading to the polls might just pull the plug on Europe's renewable energy dreams for good. Now, does it sound far-fetched? I don't know, but it's exactly the provocative case that Nick Hubble makes in his latest Fat Tail Daily piece. Now, while most investors are wondering if the brutal 50 to 80% crash in clean energy stocks has created a buying opportunity, Nick's spotted something remarkable that most have missed entirely: how Europe's interconnected electricity grid is coming apart at the seams, and why Norwegian voters might have just been the plug pullers on September the 8th at the upcoming election this year. Now, I found this pretty fascinating because it highlights how seemingly local political decisions in one country can have cascading effects across entire global industries. And it raises some questions about the future of renewable energy investing as well. So, Nick, welcome, buddy.
Yeah, thanks for having me back.
All good. Let's start with something that might surprise many viewers. Now, it's this idea that Norway functions as Europe's battery. Could you, to start with, walk us through why Norway's hydropower is so critical to Europe's renewable energy plans and what's suddenly putting this relationship in jeopardy?
Yeah, there are two important reasons, but the context is the crucial part, right? Which is that renewable energy is intermittent, but if you can create a big enough electricity grid that is able to move electricity around, then when it's windy or sunny somewhere, you can move that power to where you need it. And without that capacity, without that interconnected nature of the grid and a big enough grid, renewables start to look pretty dicey. Now, Norway was sort of pitched as the battery to Europe for two reasons. The first is that its weather is not as positively correlated to the rest of Europe as the rest of Europe's. So, for example, the UK's weather is not positively correlated to Norway's. So when it's windy and sunny in Norway or in the UK, they can offset each other, and using their power interconnected cables, they can move the power back and forth. Likewise for the rest of Europe. Second reason is hydro. Hydro is not weather dependent, at least not in the short term, which we'll probably get back to in this video. And so Norway has a lot of, it's debatable about how much pump hydro they actually have and when it's operational, when not. But theoretically, at least, having access to huge amounts of hydropower in Norway would fix this intermittency problem, not just for Norway, but for the rest of Europe as well. And in this article, we look at whether that's true or not, because it's proven not to be true already. And so the democratic consequences of that proof are sort of the next phase of why renewables are going to get into trouble, and therefore renewable stocks that people might be thinking about buying, given how cheap they are.
Yeah, right. Look, you highlight how Norway's energy minister himself described the current situation as absolutely shit, with price surges up to 20 times normal levels. What exactly happens then when Europe's electricity price volatility gets transmitted to Norway's traditionally stable grid?
Yeah, so basically Southern Europe, well, as far as the Norwegians are concerned, Southern Europe, so Central Europe, sucks electricity out of Norway. And because of the high weather correlation, they all do it at the same time. So they're all fighting over Norway's electricity at the same time. And so this imports the higher prices from Southern Europe into Norway. It sucks the electricity that they would have kept for themselves out of the Norwegian system. And so electricity prices can spike up to 20 times their normal prices. This has started causing economic havoc and political havoc inside Norway. So there's been a response now where the leading political parties inside Norway are considering renegotiating, cutting off, abandoning, putting constraints on whatever it might be, the power exports. The problem is, and this is the crucial thing to emphasize here, which you won't see discussed in most places, is that it's all about the peak in energy demand, which is sort of dinner time when the sun goes down in winter in Europe. And that is also the trough in supply for solar and wind, right? So it's not about annual figures. It's not about day-to-day figures or week-to-week figures. It's about like minute by minute figures, and that's very rarely discussed in the discussions about whether there's enough electricity. They talk about how much power was transmitted across these interconnectors between Norway and Germany and Denmark and the UK,
Yeah.
based on an annual figure, right? But it's all about, can we meet that peak in demand on a dark, no wind day in the middle of winter when everyone comes home and boils their kettle? And Norway was crucial for being able to meet that particular peak. And so if you lose Norway, or the ability to suck out energy from Norway at that particular moment in time is constrained, then the whole story as a whole falls apart, because you can't have an electricity grid that only works some of the time.
That actually goes well into one of the fundamental, well, you point out a fundamental assumption, I should say, of renewable energy. And I guess that comes back to your point that it's always windy and sunny somewhere. But how has that assumption played out in reality across Europe? And what does that reveal about the economics of the energy transition?
Europe's especially interesting because it's a grid that crosses borders, right? So people can vote for governments in their countries separately to what the energy system is assuming will happen across borders. And that's the conflict that might happen here. So in Europe, basically, the Germans have made a mess of their electricity supply under the assumption that they could just import the power when they need it.
From Russia.
Places like, from that too. But now we're talking about from interconnectors, electricity interconnectors, from places like Norway. And so everyone's assuming that the electricity will just come from somewhere, right? So if you've got a country with an isolated grid, it has to be able to prove that it can run itself during peak times when supply is tight. But if you've got an energy plan on a country that is interconnected, it can just assume that the power is going to come from somewhere because we've built interconnectors. They don't actually properly check, well, is Norway actually going to be able to provide the power, the amount of power we want, at the price we want, as fast as we want, and so on and so on and so forth. It's just, we've built interconnectors. It's going to be there. And by the way, they assume it's green as well. And so all these countries are assuming that the other countries around them will be able to provide that. And the point is they won't. And so what's happening right now is the breakdown of that. Well, if you're going to make a mess of your electricity grid badly enough that you're reliant on us, and that causes our electricity grid to start having trouble in terms of price, availability, and so on and so forth, then we don't really want to be connected to you anymore. We don't want to be able to be your battery, your backup, because you shouldn't have made a mess of your electricity grid in the first place.
You do make an observation about the paradoxical situation where Europe already has enough renewable capacity to send prices negative when conditions are good. So why doesn't simply building more capacity solve the problem?
Yeah, so you've got to be able to store electricity across long periods of time. And this is the point with hydropower, is that it's a decent way to do that. The trouble is, if you're thinking about investing in renewable stocks, you've got to be of the belief that they're going to continue building lots of renewables projects. But if the energy storage capabilities are not looking viable in order to deal with long periods of low wind and no solar, so over the winter, then the justification for building more renewables starts to fall apart, because you're not actually gaining anything. You're making the negative price shocks during peak production periods worse, and you're still stuck with the same shortage as you had whether you've got a gazillion amounts of renewables or only a little bit. It doesn't make a difference. Because they go to zero, or very close to zero. So, and then you still got to move the energy around. So the argument for why you might want to invest in renewable companies is really at risk here. I mean, like I was looking at whether or not to buy these renewable stocks, because you don't want your investment decisions to be based on ideology or whatever. And so I thought, are they so cheap that they're actually worth buying, given how far they've crashed? And what I'm trying to tell people here is that the pipeline for renewables projects doesn't have any justification without all these interconnectors functioning perfectly across Europe and sort of political cohesion across Europe. So the build out of renewables could suddenly absolutely crash, basically because we've got enough of them.
I've got a side question, actually. It kind of deviates from the thread that we've got slightly, but you just mentioned how you separate your personal bias or whatever it is from, to looking at stocks objectively, and are they cheap, or how do you actually? This is more of a practical question. How do you do that as an analyst?
So it's a financial analysis, fundamental analysis calculation. So, for example, gold stocks right now are very undervalued relative to their profits, their dividends, their free cash flow, and so on and so forth. So say the gold price had crashed instead of going up a lot as it has. So sentiment was really bad in the gold and the gold stock sector. Those stocks could still be so cheap that they're still worth buying, right? Just because the valuation of the company, it's going to pay so much in dividends, it's going to have so much in profits. That is still a good buy, even though sentiment's really bad. And my thought with renewables actually was that the first generation of renewables that were built about 20 years ago, they're going to have to be retired soon, right? And this means we're not just going to have to be building new renewable projects in order for renewables, total electricity produced to grow. We're actually going to have to start replacing the existing ones. And this is a new batch of revenue source for renewables companies. So they're not just building new projects, they're replacing the old ones. And this bulk of new projects, I thought, might cause them to increase their revenues dramatically in sort of unexpected, underappreciated way in coming years. And so I thought maybe they are a buy, because politicians can't afford to have the amount of renewable energy produced fall over time, because we're not building new ones and we're retiring old ones. That would be really an embarrassing moment too far. But my point is that with this election coming up in Norway, I'm worried that the factor which renewable energy relies on, which is the ability to move electricity around and therefore store it, could fall apart. And so things would get even worse for renewable stocks. That sort of removes even a fundamental analysis sort of valuation story from the renewable story. Because even if you only use sort of fundamental analysis of companies, so geopolitical shocks can still come along. So there is value in analyzing those, which is what I spend most of my time doing.
Yeah, and I guess even if a stock's gone down 80%, that doesn't mean it can't go down another 80%. Do you know what I mean?
Yeah.
Where it is now. Looking beyond Europe, then you note how both Australia under Dutton and China with its coal plants might be pulling back from renewables. Do you see any markets bucking this trend, or are we looking at a global reassessment now of renewable energy policy?
Well, there's two separate questions there, right? Because the one I'm focusing on in the article is renewable stocks, and you'll find those are mostly European and US green energy stocks that are then selling globally. So there's the question of how these companies are going to fare, and then there's the question of how renewable rollouts projects are going to do in places like China and Australia. I would argue that what happens in Europe is going to dominate what happens to green and clean energy stocks. As for renewable energy rollouts, the crucial thing to notice is that in China, as I understand it, this is based on an interview with Greg Canavan, our colleague, the way that renewables run is very different. So in Western countries, what we do is we say to renewables companies, you produce as much energy as you can. We'll curtail fossil fuels in order to adjust whether there's enough electricity or not. China's doing the opposite, saying to coal companies, you run and we'll adjust the renewables side of things. So the burden of intermittent electricity production is placed on renewables instead of being placed on the fossil fuel sector. So instead of a gas company owner only producing electricity and only making money when there's no wind and sun, they've got a more stable outlook. The investment case for that is much more beneficial. And so this radically changes all of these problems, because if you don't need to have energy storage for renewables, then the argument's totally different, right? All the things we said about Norway and Europe no longer apply. So the Chinese are not transitioning to renewables dominated systems, so they don't have the same problems, and the incentives are very different. In Australia, we're going to have to find out what ends up happening, I guess. But I don't think what happens in places like China and Australia is going to help terribly much with renewable energy stocks if they start to lose huge amounts of their orders in Europe, which is their key base.
Yeah. So final question then, Nick, there's a fascinating line in your piece about waiting for a buying opportunity in renewables that will come as you say, long after the Norwegian elections, force Europe to wake up and smell the gas. What specific developments would signal to you that the sector has finally reached a genuine bottom?
Yeah, so what's going to happen here is after the Norwegian elections, Norway's going to come up with a policy where it does something to the interconnected cables that sell power to Europe. It's going to, either stop using them, renew contracts at crazy high prices. It's going to reserve the right to refuse to export and so on and so forth. This means the plans in places like Europe, in places like Germany and the UK, are going to have to be rewritten because they're no longer going to be able to say, we'll just rely on Norwegian power imports when the wind doesn't blow and the sun doesn't shine. And that changes the equation radically because it increases the risk of a blackout to unacceptable levels, right? And so we actually saw this a few months ago now in the UK, where if it hadn't been for a lot of energy imports from interconnected cables, there might have been a blackout. That's how tight things were. And it was a big political scandal in the UK. If the Norwegians crack down and say, we might not help you on those cold, dark, windless nights, then something has to give. The energy plans as they currently stand no longer work. So my suspicion is that countries will turn back to gas, right? So after all of that occurs and the official government plans change, that's when I think renewable energy stocks might be a buy, because there are plenty of great, useful opportunities within the sector at cheap enough prices. It's just that we don't have this, huge global government-supported boom anymore. I'm sure we can find ways to integrate renewables into the system. It'll just be significantly less than the government official plans and the estimates currently presume. Now, I'm not so sure I'd be looking at those stocks unless there's some sort of intriguing opportunities like the one I mentioned earlier about having to rebuild existing plants, existing wind and solar plants, and this suddenly coming onto their revenue projections. It'd take something like that for me to be interested. But yeah, I think we're going to be waiting for a while, and these renewable stocks that look cheap, given what's happened over the last few years, so since the middle of 2021, I think, they're not cheap. There's worse to come.
So renewables are out for now. What should you do with your money in the meantime? Well, check out our latest opportunity report. The link is pinned in the first comment below. It's a fascinating insight into the next technological revolution, which is tied inextricably to the energy story. Check it out. Nick, thank you very much, buddy, and we'll talk to you again very soon.
See you next Friday.